let me add my voice to those who have said there is nothing wrong with the Central Bank of Nigeria Act. There is nothing wrong with BOFIA. The CBN Act is one of the best central banking laws in the world. In fact, when we reviewed central bank laws, the only law that we saw that we would have learned a few things from was the law setting up the Bank Negara Malaysia. Now, if people who are supposed to implement a law do not implement it, the solution is not to change the law. And this reaction is a knee-jerk reaction. If you take away the independence of the central bank, if you bring it under political control, you hurt the system, and long-term, you are institutionalizing the lack of autonomy. The reality is you have an independent, autonomous central bank whose independence was undermined by a combination of politicians and central bank actors. It is time to go back to what the central bank is supposed to be and implement the law. So I'll give you an example. People talk about ways and means. Ways and means only happened because all along the line, all the checks and balances collapsed. When the National Assembly talks about ways and means, the question is, where were the oversight committees of the National Assembly? When they did the law, they said very clearly that the central bank can only lend to the federal government if the federal government has no money of its own, and that when you lend up to 5% of previous year's revenue, and once you reach that limit, the power of the governor to lend money to the government is extinguished. If you want to change it from 5% to 10% or 15%, you go and amend the law. You don't ask the central bank governor to break the law. But if the central bank has broken it, you had a National Assembly. The reason you have the protection for the governor of the bank is exactly so he can say no. We were all asked when we were governors to bring money, and Sarah knows there was a day I was called by the finance minister, and she wanted us to, they needed 100 billion. And she called me and said she had spoken to Tunde Lemo, and he said he should speak to me. She should speak to me. And I said, why? He said, you have reached your limit. We have reached our limit. He said, so what do you want me to do? Break the law? And at the end, we just agreed that, look, we've done our interim audit. We know how much we are going to pay you as dividend this year. We can give you an interim dividend. Sarah is there. And we agreed to give them an interim dividend, part of their surplus, in advance. Okay? The finance minister understood that this is the law. The central bank governor is not supposed to break it. And there was a reason for that law. We had a conversation. We found a solution that did not break the law. There is absolutely nothing wrong with that act. The law, if the central bank had kept within that limit, we will not have inflation where we have it, we will not have exchange rates where we have it, we will not have these problems. And the reality is, I have been talking about this since 2015. I first raised an alarm when Ways and Means was 4.7 trillion in December 2015. Civil society, where were they? The press. I mean, everything we're complaining about today is something that every economist would have told you would happen. There are policies pursued by Idi Amin in Uganda, by Mugabe in Zimbabwe, by Chavez in Venezuela. There are policies, we have seen them happen. It's very easy. Once you print money, you know where you're going to end up. And that's why when we talk about regulation, we've got to remember that banking as an industry is inherently risky. And there are many reasons why it has to be regulated. Regulations are dynamic and they keep changing. New risks emerge. And to be honest, you bank directors are the very first line in regulation. And what regulators need to do is focus more on making sure that banks are well managed and that banks understand the risks that they run. We keep telling bankers, you know, banking is a business like no other. It is the only business where people will come and carry their entire wealth and give you based on trust. You don't give them any collateral. Set up any kind of industry and you want to borrow $1 billion or $2 billion, you need collateral. The banks, you're borrowing money, trillions and trillions of naira without giving anybody collateral. The only thing that you have is that the central bank licensed you and the public trusts you. That is the only collateral that you have. It's your integrity, it is a trust. When a banking system begins to operate in a manner where the public does not trust it, that system will collapse. Trust is the foundation of banking, which is why when we're in the bank, if there was any question about the integrity of you don't have to steal money. Once your integrity is questioned, you are dismissed. And this is the reason, because the entire system collapses once trust fails. If you lie to a customer, if you deceive a customer, if you have a problem with reconciliation and cover it up, you go. Not termination, not suspension, dismissal. Because bankers are supposed to be trustworthy. That's why people give you money. Now, regulations are one thing, of course. The actual doing of regulation is another thing. When I came to the central bank, I used to tell banking supervision that, you know, for years as a credit officer, I received bank examiners. But as a risk manager, as a chief risk officer, I don't think the regulators asked me the questions they were supposed to be asking me. Focus on looking at the loan book and seeing which ones are non-performing loans. By the time a loan is non-performing, it is too late. We need to focus more on how do you stop loans from going bad. You need to start asking banks, what are the risks that you run? How do you assess your macro risk? What is the board doing? What kind of reports does the board get? You have your credit risks. Have you identified them? How do you choose your credit portfolio? How do you select your industries? Look at your product programs. What are the operational risks in those products? What are the market risks in those products? The quality of people who are running your risk management. The operational controls you have around your technology. By the time we focus more on what the board is doing, what the processes are, what the policies are, you then have the result. The result follows. But once we wait until banks book any kind of loans, operate in any kind of industry, and then at the end of the day we just come and calculate this is substandard, this is doubtful, this is lost, it does not change the fact that the bank will fail. Therefore, the quality of risk management is something that we need to be focused on in our regulations. Set the guidelines and follow that. And that's why I agree with Mustafa on his suggestion of meetings with bank directors or chairmen to consult, yes, but to also ask them what they're doing, to assess how much the board knows, how much governance the board is actually doing. And believe me, we have had cases where bank management controlled the board. When we went, and I've said this before, and it's public information, we had a bank where the bank CEO took a loan approval to the board. The board declined it, and she came down to her office and approved it that same day and disbursed. She overruled the board, and nothing happened. because she had picked every board member and appointed the board member, and she owned the bank, or she believed she owned the bank. Is that still happening? I don't know. And these are the kinds of things we need to look at. And this is your role as board directors, because that is the first line of defense before the central bank. So personally, I think that we're at a time when we can look at the regulations, but all regulations that are aimed at strengthening risk management and governance should be given priority. And there should be a lot of delegation. We need to, and that conversation helps. Regular conversation with the board, regular conversation with the management. So I'll give an example. Today, we're going through difficult times. The central bank has to take decisions to walk back from 8 years of loose money. Central bank has started tightening. Absolutely necessary, because if the central bank is to focus on its role of providing stability, because that's what the central bank is supposed to do. We used to debate with Sarah the exact meaning of price stability conducive to growth. You know, that was the job of central bank. The central bank is not to create growth. Is to create an environment that is conducive to growth. It is not the finance ministry. It is not the one doing structural policies. Now, when the central bank returns to that role, now they've got to tighten money, because for 8 years, we've had situations where it's like driving behind a driver who trafficates left and then turns right. You have every MPC meeting and there's an announcement of an increase in MPR, and then the next day, Ways and Means is pumped into the system. So you say you're tightening money, but you are actually loosening money. Now the central bank has started tightening. And we're seeing month-on-month inflation figures go down. Exchange rate needs to be stabilized. I'm happy CME is here. I'm appealing to CME to please hurry and bring the $7 billion to the CBN, 10 billion, because that was promised at NESG. We are going to hold you to that. Because in the short term, we need to stop the hemorrhage. To stop that hemorrhage, we need liquidity in the market. And I keep saying, if you asked me before this started, if I were governor, what would I do to stabilize the currency? I would do exactly what the central bank is doing. Pay back the past dues, get liquidity into the market, and tighten money. That's all. But that's a short-term solution. And it will get us over the next year or two, and we can stabilize. And frankly, I think the Naira is where it should be, about 800. That's a really effective exchange rate. What we need to do is close the gap between the official and the BDC rates. However, after 1 or 2 years, the CME, we still have to pay back that money. And we have to address the fundamental question: why is there no money coming in? Why is NMPC not able to bring in dollars? I'm sorry, this is the question that cost me my job. I will continue asking this question until NMPC is fixed or until I die. Where are the dollars? We need to shine light on NMPC. The finance minister cannot tell you, because he doesn't have a metering system that reports to him. The finance minister cannot tell you that today, this is how many barrels of oil that we produce and exported. You can only rely on NPC telling him. Those barrels are revenue. They belong to finance. We've been talking about this for 10 years. We need a metering system. The finance ministry needs to know how much oil we are producing every day, how much oil we are selling, and where the money is going. Because if you don't fix the leakages in that system, if you don't fix the revenue, the dollar revenue issue, you will never fix the exchange rate problem. Oil is not going to grow our GDP. I've always said that. Oil, I mean, if you took out all the oil in Nigeria today and sold it, it would raise our per capita income to maybe $4,000. We won't even be a middle income country. Oil will never make us rich, but it is working capital. It is working capital. It is a lubricant for our import-dependent economy. And we cannot afford to continue producing the oil and not seeing the revenue. We are no longer paying subsidies. So where are the dollars? Before it was under recovery. Now we don't have under recovery. Where is the money? It was the issue I raised for which I was suspended. You can suspend me again. Okay? But it is an issue that this country must address. NNPC is the most opaque oil company in the world. When I was in the central bank for 15 years, they had not been audited. So, you know, the central bank is easy to attack. But the central bank does not manufacture dollars. It's not an exporter. It produces naira. It can buy dollars. Now, there are things that are not NNPC's fault, or that could, but things that could have been done better. We're producing a lot of our crude oil offshore. Deep offshore production, PSC agreements mean we get only 40% of that. It was 20% before. So if you produce 1 million barrels deep offshore, you get only 400,000 barrels. We could increase the onshore production. But what have we done? The IOEs went out and we signed all these SAAs with our cronies and our friends. We need to review. Those who are producing onshore oil, where we have the highest, these are wells that have been in production for 7 decades. They are mature fields. At this time, you need international oil companies, not Shell, not Exxon. You've got medium-sized IOCs operating in places like Gabon, in places like Latin America, in places like Asia. Get them to come and maximize the output from those fields, because that is where the government has the highest revenue stake. We can't just have Shell step out and then I take my friend Mustafa Chikiobi and co, who has never been in oil production, and then give him the license and say, come and produce oil, and expect to get revenue. We need to revoke those things and give people who can bring in the technology and the skills to sweat those, because you need to have a long-term solution to this problem. Plus other structural changes, moving to alternative energy. CNG vehicles would save you 60% on PMS. Convert 3 million vehicles and see what happens to inflation. See what happens to your foreign reserves. So I get worried because while the central bank certainly has done a lot of things wrong in the last 8 years, there has been so much attention on the CBN, and we are not looking at other people who may have even done worse. We paid 11 trillion naira in fuel subsidy. There's no accountability up to now. The National Assembly called NNPC to bring the documents. They refused. And by the way, let me advise that this idea of the president being petroleum minister is not a good idea. The last president was Minister of Petroleum for 8 years. When I was governor of Central Bank, we had a petroleum minister. So when I talked about NNPC, I could attack Dizani. Now nobody can talk about petroleum because 8 years, if you talk, you're attacking the president. We need that buffer. Somebody has to be there. So a minister has to be there who is held accountable by Nigerians. I say this because if we're talking about banking, if we're talking about the banking system, if we're talking about the economy, we've got to look at all these linkages. And this excess focus on banks, on regulation, and all that, it's important, but we also have to look at transparency and regulation in other areas. Okay, so what are the risks that you run today as the central bank tightens money? Please look at your portfolios. My fear is that if a bank is going to go down at this time, it will not be credit risk, but it could be market risk. And we need to have a stress test on the banking industry. And this is where the directors come in. We need to have stress tests and a conversation between the central bank and the directors. And the purpose of these tests is not to punish anybody or investigate anybody. It is to understand which banks are at risk and what steps need to be taken to protect them in the event of a shock.